Hello, everybody. Christopher Kinley, co-founder of Rehab Reserves. Hope you're having a great day. Today, I just wanted to make this video, go over how to navigate to the classroom, and then also review the funding playbook. So when you're on your dashboard here under Community, you just click on Classroom. And then here you have the funding playbook. You also have the other courses that we have available for y'all to check out. If you click on Funding Playbook, it opens up here, and this gives a detailed overview of each section within the funding playbook. The funding playbook can be found at the very bottom. If you click on the PDF here overview, that will actually open up the funding playbook for you in a PDF format that you can download, you can share, and review. Has quite a few slides, I believe 18 slides in total. The first section is just going to give a brief overview of what business funding is and how it is different than applying for personal credit cards, personal loans, or lines of credit. Next section will go over the actual qualifications and gives you some examples as to each tier and what you could expect to get funded for. A lot of it comes down to the relationships that you have established, the credit history, the amount of time that you've had loans open, cards opened, the current limits available on those cards or lines of credit, as well as, are the loans new? Have they been paid off? Is there any late payment or charge off? Collection history. Obviously, any negative issues on your credit file will negatively impact getting business funding. Goes over all that in detail. Funding options. So when it comes to business funding, it's essentially very similar to personal funding in the sense that the products are the same and how they're used. So how you would use a personal credit card, business credit card, no different. It's just on the business side. Doesn't report to your personal credit, which I'll get into that a little bit later. So personal loans, business loans, same function, set term. You got interest, you got monthly payments. Once they're paid off in full, closes. So a lot of different use cases for your different options. LLC checklist. This is extremely important. So making sure that your company is set up and structured properly for business funding is definitely one of the pillars before you actually apply. Just like if you're 19 years old, you've only had credit for 3 to 6 months, and you go out and apply, lenders are going to be very hesitant to approve you because you don't have any credibility or history on how you've managed credit. And also, what do you do for work? What's your education level? All that goes into play. Same thing on the business side. They want to know, okay, what's the nature of your business? Where's it located? What's the name of your business? Making sure that you don't have any, kind of wonky business names that the lender or the bank is not quite sure what it means or what you do for business. Goes in depth, gives you some examples on, what type of business names or language you can use in the business. And then obviously there are riskier industries for your company. So just making sure that the way that your company is positioned and how you allocate and represent the industry you're in and what you do for business, who your clientele is, that definitely will impact your ability to get business funding. That also ties into obviously the business structure, went over that. Ideal credit profile. So as I spoke about earlier, the actual qualifications for funding, credit profile is key and crucial when it comes to getting approved for 0% business funding. Your personal credit file is essentially the foundation, the pillar, the building block that lenders will use to approve you for 0% business funding. So again, who those relationships are with, payment history, the available limits that you have on personal credit cards, as well as a credit mix. So do you have, mortgage history, personal installment loan history, auto loan history? All that helps and will help you further get along with getting what you need as quickly as possible in the fewest amount of applications. Utilization is huge. So you might have high limits and really good age, but if you're heavily using your personal credit, even for the business, and you're making your payments on time and everything, that's great. but that will significantly impact your ability to get approved because that puts you in a higher risk category, especially with debt to income ratio. You just want to make sure that your utilization is under control and accurately reporting on the 3 credit bureaus before you apply. So it goes over all that in detail. And then on the business applications, you can apply more times than not online for an application, or you can go in branch. From what we've found over the past 3 years in doing funding is when you have someone internally at the bank that can help you structure the application, can handle any questions that underwriting has on your behalf because they've already spoken with you. They know what you do for business, what you're going to use the funds for, how much you're requesting. That goes a long way and definitely helps you get approved for much more funding than you just doing it on your own. The processor line of credit is actually a really good tool for a lot of businesses that have high processing, monthly, high processing volume essentially on credit cards monthly for their business. So restaurants, e-commerce businesses, etc. If you are processing a substantial amount, I'd say at least $20,000 a month on average in processing, there are options available. We have a couple partners that can get you a really good unsecured business loan, no credit check, and the term is 5 years. Interest rate is a flat 6%, and so super good option for clients that maybe don't have the personal credit where it needs to be to get approved for 0% funding right now in the short term. But instead of going out and getting a high interest merchant cash advance loan or short term business loan, the processor line of credit can definitely be beneficial. Credit bureau impact. So as I mentioned earlier, personal accounts, they report to your personal credit. They build personal credit. On the business side, business credit cards, business lines of credit, business loans, they don't report to your personal credit, which is great because if you go out and you get approved for, $100,000 hypothetically and 0% business funding, and you go out right away and you obviously want to leverage that for your business, those accounts will be maxed out. So your utilization might be close to 100%. Obviously, you're not paying any interest. The great thing about that is it does not report to your personal credit file. It does not impact your personal credit in any way. And you're also able to dispute those inquiries because those accounts aren't reporting. So you can say to the credit bureau, whether it's Experian, TransUnion, or Equifax, hey, this inquiry is not attached to any open account. Please remove it from my file. And they'll remove it. Experian, usually within 24 to 48 hours. Equifax and TransUnion, a little bit slower with getting it done, but they can definitely get that done. If you need help with that, we definitely provide that service. So if you want to get funding on your own, but you need help with the inquiry removal, just let us know. We can help you get that done. We also provide you with a sample funding sequence. So you can kind of get an idea of, what it looks like to actually go out there and apply for some funding on your own, whether it is on the personal or business side. Also goes over, home equity line of credit, a home equity loan, what the benefits are of each of those, what are the risks that you need to look out for. One big thing that a lot of people overlook is they get a home equity line of credit, which they might get at a really low rate, which is great, but it does report to your personal credit file under your personal credit section. So it does add available credit, which is great to your overall available credit on your file. But when you use it, it impacts utilization. So going back to what I said earlier, that does have a negative impact with getting funding on the business side. So if you are thinking about doing a home equity line of credit, you might want to explore a home equity loan, which actually reports as an installment loan under the real estate and mortgage section of your credit file and has zero impact to your utilization. Goes over hard money. why a lot of investors use hard money loans when doing their fix and flip real estate investment projects, the pros and cons about that, different, strategies that you can use specifically in real estate, fix and flip, buy, rehab, refinance, rent, long-term holds, how you should strategically, apply for and get approved for the funding that you need based on the scenario that you're wanting to tackle. It's not the same across all different ways. And then we do provide you with some bonus content as well. So again, you go to the classroom, the very first one, funding playbook. Here's the overview that we just went over. And you just click on overview here at the bottom, opens up the PDF. Again, you can download it, you can share it. And as always, if you do want to explore working with us, just drop a comment, let us know, and we can point you in the right direction to set up a call. And then if you found this video helpful, if you have anything you maybe disagree with or any questions, feel free to leave a comment. We'd love to dive in and discuss further. And I'll see you on the next video.